In the last 48 hours, two companies joined the most exclusive club in finance, the $1 trillion market cap club. Micron Technology surged 19% in a single day. SK Hynix jumped 11% today. Both crossed $1 trillion, and almost nobody is explaining why this matters. SK Hynix is up 250% since January, making it one of the best performing major stocks on Earth this year. Micron is up 73% just this month. These are not small companies, these are trillion-dollar businesses that most retail investors have never researched. Before I tell you why this is happening, let me explain what memory chips actually do. Think of a GPU or CPU as a chef. The memory is the kitchen counter. The bigger and faster the counter, the more the chef can prepare simultaneously. AI models are so complex, they need enormous, fast counters. The specific type of memory driving this rally is called HBM, high bandwidth memory. Regular memory moves data at 100 gigabytes per second. HBM moves data at over 1,000 gigabytes per second, 10 times faster. Every AI chip from Nvidia, AMD, and Google needs HBM to function at AI speeds. Here's the structural fact that changes everything. Only 3 companies on Earth make HBM chips: SK Hynix, Samsung, and Micron. That is it. Every single AI accelerator built by Nvidia, AMD, Google, and Microsoft needs HBM from one of these 3 companies. This is one of the most concentrated supply chains in the history of technology. SK Hynix, Micron, and Samsung's HBM production is completely allocated through the end of 2026. You cannot buy more even if you wanted to. Every chip they will produce this year is already spoken for. This is what a genuine supply shortage looks like. Micron reported earnings that beat estimates across every metric. Revenue of $9.3 billion, above the $8.9 expected. EPS of $2.22, beating the $1.98 estimate. Gross margins hit 40%, the highest in 3 years, and Q3 guidance came in above estimates. UBS put out a note saying Micron has more than 100% upside from current levels. Their reasoning: Micron has locked in long-term HBM agreements. AI demand is structural, not cyclical, and Micron is the cheapest of the 3 HBM suppliers on a valuation basis. Here's the connection that most investors are missing. Every Nvidia Blackwell GPU contains HBM memory chips from Micron or SK Hynix. When Nvidia reported data center revenue up 92%, Micron's HBM shipments grew in direct proportion. Nvidia's success is Micron's success. SK Hynix's journey to $1 trillion is one of the most dramatic stock stories of 2026. Up 250% since January. Each step in the rally was triggered by a different AI earnings confirmation: Nvidia, AMD, Micron. Each one adding another leg to the SK Hynix move. Apple took 40 years to reach 1 trillion. Microsoft took 44 years. Micron was founded in 1978. It took 48 years to cross the threshold. But the final leg, from 500 billion to 1 trillion, happened in just 5 months, all driven by AI memory demand. To make HBM chips, Micron and SK Hynix both need machines from ASML, the Dutch semiconductor equipment company. ASML makes the extreme ultraviolet lithography machines that manufacture every advanced chip on Earth. Without ASML, no HBM is possible. No Nvidia chip is possible. No AI is possible. ASML has 100% market share in extreme ultraviolet lithography machines. Not 90%, 100. There is no competitor. Every advanced chip factory on Earth buys exclusively from ASML. This is the purest monopoly in the entire technology supply chain. While memory stocks were exploding, something equally important happened in oil markets. WTI crude fell 5.7% to $88.53, breaking below $90 for the first time since before the Iran war began. Iran State TV said the country is committed to restoring Hormuz traffic within 1 month. But the White House called Iran's announcement a complete fabrication. Two completely contradictory statements from the two sides. And yet, oil still fell nearly 6%. The market is pricing optimism regardless, because traders believe some form of deal framework exists, even if the details are disputed. In every video since April, we have shown you the oil inflation rates chain. Oil above 100 means sticky inflation, means frozen Fed, means headwind for growth stocks. Oil breaking below $90 begins to snap that chain open. This is the signal we told you to watch, and it just triggered. One warning in the oil story. The probability of a July rate hike jumped from 0.9% to 8.5%, up 844% in a single month. It is still only 8.5%, not the base case. But a year ago, this number was zero. The market is starting to price in scenarios nobody was discussing in January. The Dow Jones hit a new all-time record today, up 182 points. Procter & Gamble surged 3%. Home Depot gained 2%. But the S&P and Nasdaq both slipped slightly. The market is rotating. Money is moving from tech into consumer staples while oil falls. The HBM memory market is doubling roughly every year. $5 billion in 2023, $58 billion estimated for 2026, $95 billion projected for 2027. Three forces are driving this: agentic AI, physical AI, including robotics, and sovereign AI as governments build national AI infrastructure. Agentic AI is particularly memory hungry. A regular AI model processes one query at a time. An AI agent runs multiple parallel operations simultaneously, searching the web, generating output, running code, managing long context windows. This multiplies memory requirements by approximately 5 times compared to simple chatbots. Even if the Iran deal is signed tomorrow, Wolf Research says the process of rebuilding commercial and strategic inventories will stretch well into 2027. There are an estimated 1,500 ships currently in the Persian Gulf. Henrietta Trays of AGF Investments called it the Hormuz hangover, measured in quarters and years, not days. Another story from this week, Intel is up 234% since January. The Apple chip manufacturing deal and AI foundry demand drove the surge. But Citron Research warned that Intel is now quite expensive even if its data center business grows 40% by the end of 2027. The three HBM suppliers are not equal. SK Hynix leads with 50% market share and is the technology leader in HBM, 3E, Nvidia's preferred supplier. Micron is competitive and valued cheapest. Samsung is the largest company, but slightly behind on HBM quality. Nvidia reportedly deprioritized Samsung orders earlier this year. There is a concept in investing called the picks and shovels trade. In the California gold rush, the people who got consistently rich were not the miners. They were the people selling the tools. Micron and SK Hynix are the picks and shovels of AI. Whether Nvidia or AMD wins the GPU war, both need HBM from the same three suppliers. Three more important AI signals arrive this week. Salesforce reports tonight. Their AI software suite will tell you whether enterprise AI is generating software revenue beyond hardware. Marvell Technology reports tomorrow. They make custom AI chips for hyperscalers, a direct read on in-house chip demand. And Dell reports this week, the leading AI server demand indicator for enterprise. Here's the complete AI supply chain in one diagram. ASML at the foundation makes the machines. SK, Hynix, and Micron provide the memory. TSMC manufactures the chips. Nvidia and AMD design the GPUs. And Microsoft, Google, Amazon, and Meta run the AI services on top. Every layer is growing simultaneously, and every layer depends on the one below it. Look at what has been confirmed in sequence this earnings season. Alphabet confirmed the top layer. AI is generating cloud revenue. AMD confirmed the GPU layer. AI chip demand is surging. And now Micron and SK Hynix are confirming the memory layer. Every single layer of the AI supply chain has now reported real, accelerating, supply-constrained revenue. Here is something that will surprise most investors. Micron is the cheapest member of the $1 trillion club by price-to-earnings multiple. Apple trades at 30 times, Microsoft at 35, Nvidia at 21, Micron at 12 times forward earnings, the cheapest valuation, the fastest revenue growth. And UBS says 100% upside remains. The risks are real. Memory chips have historically been deeply cyclical. Explosive boom periods followed by brutal busts. SK Hynix is up 250%. Any slowdown in AI capital expenditure creates significant correction risk. And if Samsung closes the HBM quality gap, pricing power for all three suppliers erodes. Memory stocks have been viciously cyclical for decades. In 2022 and 2023, Micron stock fell 50% as the memory market crashed from oversupply. The bull case today is that AI demand is structural, not cyclical, meaning this boom does not end when the consumer PC cycle turns. The bear case is that they said the same thing in every previous boom. The argument for why this cycle is structurally different: HBM is already sold out through year-end, so there is no oversupply risk in 2026. Agentic AI and physical AI create demand that does not depend on consumer PC sales. And sovereign AI represents multi-year committed government spending. The key caveat: regular consumer DRAM is still cyclical. Only HBM is different. 3 investor actions. If you already own Micron or SK Hynix, thesis dramatically confirmed, monitor Samsung and cyclicality risk. If you are considering buying now, after a 250% SK Hynix run, the easy money is taken, size carefully and understand the risk. If you missed both, ASML is the overlooked Layer 1 play, and Marvel reports tomorrow with custom AI chip data. The week in numbers: Micron up 19% and crossing 1 trillion. SK Hynix up 11% and crossing 1 trillion. Oil below $90. S&P 500 and Nasdaq hitting new records. The Dow hitting a new all-time record. And HBM confirmed sold out through 2026. Every data point this week pointed in the same direction. 5 signals to watch: Marvel earnings tomorrow, custom AI chip demand, Iran deal confirmation, oil below 85 would signal full resolution, Samsung HBM quality, the competitive threat to SK Hynix. Dell earnings this week, enterprise AI server demand. And the Fed's July meeting, rate hike probability is now 8.5% and rising. Here is the one-year picture that puts everything in context. The S&P 500 is up 28% over the past year, a great year by any historical measure. But the AI supply chain stocks have absolutely destroyed that number. AMD up 320%, Micron up 150%, SK Hynix up 250%. The market is strong. The AI supply chain is extraordinary. Drop a comment. Which of these memory and AI supply chain stocks are you watching or already own? SK Hynix, Micron, Samsung, or ASML? I read every comment and the answers shape what I cover next. I am Marcus. Micron and SK Hynix just joined the $1 trillion club. The AI memory story is the most important supply chain story in technology, and almost nobody is explaining it properly. Subscribe and hit the bell. Marvel reports tomorrow, and that result will add one more layer to everything we covered today. I will see you there.